What's up, guys? Welcome back to the channel. Today I want to talk about the daily trading bias. All right, so we're looking at the GBP GPY chart. And before I get started, I want to talk about my coaching program real quickly. No scam, no bullshit, but if you have been following my channel for a while, you know that I do coach people one-on-one. And every month I take on a handful of people to work with one-on-one and to build them into profitable traders. If this is something you want, because I still have a spot for this month, comment down below or look in the description and book a free Zoom call with me. And then we will talk about how I can help, what you're struggling with, and those type of things. Now let's go on with the video. So today is about building a daily trading bias, and the trading bias can be very, very crucial when you're trading. And I know a lot of professionals and big traders that develop a bias before they start trading. Now, what is a bias? It simply means a sense of direction in the market, so either bullish or bearish. And if you have a clear sense of direction, all you have to do is pick an entry into that direction. And that makes it way easier. It kind of frames your trading, because if you're just looking at a chart and you're not prepared and there's no bias, you're like, oh, I'm shorting here, buying here. And that really can increase impulsive trading. But if you have a clear bias, that can really help you to develop a trading edge. So let's take a look at this chart. And one thing that I like to do is use liquidity as a bias. Of course, you know, I trade mechanically. I take my setups everywhere, but when there's a clear bias, it just makes things better and I win more often than when there's no bias. So if we take a look at GJ, and if we take a look at this particular level, we have equal highs on the daily time frame. Equal highs mean there is going to be liquidity above here. You will have people with the stops above here, and you will have buy stops of people that want to be buying the breakout. So there's a lot of liquidity up there. And as I've said before, markets like to test for liquidity. Markets are curious. They want to see how is the market going to respond? How is price going to respond when certain areas of liquidity get taken out? So how do I use this in a bias? If we have this double top here where we know most likely will be liquidity, and then if we take a look at recent price action of the past weeks, we took out the low of the range. We went down, we retested kind of the origin of the up move, and then we violently moved back above the low of the range. So if there was liquidity resting below the low of the range, it has now been absorbed and we are back above here. So at this point, I have a bullish bias. And why? It's quite simple, because when one side of a range breaks, price tends to move to the other side of the range. That's just what happens over and over again. Not always, of course, nothing is certain in the markets, but that's just what happens. So as soon as we took out the low of the range and we violently closed back into the range, this becomes the target. Because if you think about it, this was where liquidity is resting. It has been absorbed. This is the next major area where liquidity is resting. So now at this point in time, you have a bullish bias. And now it's up to you to enter into that bullish bias with a reasonable stop, and this being your target. Because in this case, we got a breakout, but more often than not, you will see a false break at those key areas. So that can really, really help you. And if you just go back over the chart and just look at these things happening over and over again, and I know this is hindsight analysis, but you can really use this when live trading. So if we take a look here, we have this key swing low that created this up move. Then we get back to it, take it out. So anyone that was buying in this area and placed a stop below, or anyone that wanted to be shorting below here, they all got stopped out. Then we get this firm rejection, and then we get this move to the other side of the range. Now, of course, there was a lot of chop, but this just shows you that as soon as these type of things happen, this can really give you a bias to go long. And especially after this, you should really be thinking, all right, I want to be long in this market. And then here the same thing happens. We take out a kilo and we move up. So again, after this happened, after this impulsive move, buy on a retrace and target the next important areas of liquidity that can really, really give you a bias. Now, in terms of which time frames, I do this on a daily time frame. My setup triggers on the D1 and the H1. And in terms of a clear bias, I really like to stick to the higher time frames because that just gives me a better sense of direction. Here is another great example. We've got a double bottom below market, and we know that below double bottoms will be a lot of orders resting. In this case, people that went long have to stop below, and people that want to be selling a breakout will be triggered here. As soon as we take out the low, let me quickly zoom in to make it a bit more clear. There we go. So we take out the key low. Well, that's a nice line. So we take out the key low, then we immediately the day after close above. Again, a bullish day. Then we have a bearish day, and we took out these highs, but we just don't go down. And then we have another up day. So at this point, you should be having a bullish bias. And then it's just up to you where your target will be, how you're going to enter this. But this just gives you so much clarity. If after this false break and at this particular point, you know you have a bullish bias, all you have to do is find an entry setup that gives you an edge in line with this bullish bias. And it allows you to follow the trend. And of course, if you entered after here, you did get a bit of chop, but look at that impulsive move up. So that's really the strength of a bias. Now let me grab another pair for you guys to make it more clear and to give you some more examples. USD Canadian, look at that. Key high gets taken out. And then you can just, at that point that it rejects and here the impulsive move away. At this point, I have a bearish bias. And if I get a setup after these things, I will risk way more than on normal setups because it just lines up. Here the same thing. We do close above it, but as soon as we close above that level, big rejection, price falls down, and you can just come up with any trade idea to trade in that particular area. It just happens over and over again. If you just back test this, if you build some rules around it and just look back over your charts and start back testing in line with a bias, or even if you just have your trading journal and you just fill in a column, did we have a clear bias, yes or no? And then if you trade 100 times or so and you look back in your journal, you can quickly see, okay, if I trade in line with a clear bias, the odds of winning do increase. And that's for me is the case. My win rate goes up a lot when I trade inside with a bias. And here we do have another example, clear range developing, low of the range taken out, quickly we move above, then we get this tighter trading range and price has all the opportunities to go down, but then violently shoots up. And it's at that point that you're like, okay, this was a false break to the downside. This is the high of the range that becomes vulnerable. And that's where you want to be targeting. And whichever way you enter, that's up to you. But this just gives you a clear sense of direction. And you can even do this if you're a day trader and you go to the lower time frame. So let's say the hourly time frame. You can also highlight these key areas to get a potential trading bias. For example, look at this range low. Here we take the range low out. And what's interesting is that we immediately shoot up. So at this point in time, that should give you a bullish bias to target the high of the range. And as you can see, we go to the high, take it out, and then go back to the lower end of the range. It happens over and over again. And if you're a day trader, picking the right areas, and that's very clear, guys. If you're going to do this on the lower time frames, you should be picking the key swings. So not just any swing, key swings and key lows, equal highs. So in this particular case, I would pick this key high. Jesus Christ. I would pick this key high. I would pick these lows. And I would pick this high. And that's all I would mark out on this particular chart if I would be looking for a clean bias. And then I just want to see what happens if price goes to these areas. If it goes here and we get this, a bit like we have seen here, or a bit like we've seen here on the downside, that gives me a bearish bias. If we gets a bit messy here, if we get this type of pattern in this particular area, that gives me a bullish bias. And then you target the next key area of liquidity. Hopefully it's clear, and hopefully you can build this into your strategy. Again, if you already have a strategy or an entry set up, just start with journaling. Just make some rules about the bias, and then just as soon as you lock your trade, fill in if you had a bias, yes or no. And then over time, you can see if it does increase your performance. I know that my win rate is normally, on average, on every setup, my win rate is 65%. Without a bias, it goes to around 60%, a bit lower than that. And with a bias, it goes to the 70s. So it does make a difference. And it's going to take some time to get used to it and to track these things in your journal, but that's the game. You want to keep improving. And I can also still improve, believe it or not. I've been trading for a long time, but I still have a folder with so much ideas and things to backtest. What can I improve? What if I do this? What if I enter here? What if the volatility is this big? Does my setup work better? Those type of things you want to keep improving. That's another tip I want to give you guys. Make a map on your computer, put in a file, and just as soon as you watch things or read something and you get an idea, put it in there and just start testing it for yourself. Don't take anything because someone says it. Because I say something, I might be a cunt. You don't know, maybe I am. But the thing is, test everything for yourself. On the internet, you see so much bullshit, people saying, oh, you should be moving to break even. Should you? If I move to break even, my edge goes down a lot and I lose a lot more money, a lot more profits, I have to say. I cut down my profits a lot if I move to break even. But for some people, it might work. Does it work for you? That's what you want to figure out. Everyone is different and concepts work in a certain parameter for certain people. So everything you want to implement or everything you read and you think, oh, this might work for you, test it out, and you want to write down the ideas and then just back test it, get the data and see if it actually works for you. Some things are very easy to back test. If you just put in your journal a column, what happened if I move to break even? So you have the outcome of the trade, and then you put in another column saying outcome of the trade if I move to break even. That's it. After 100 trades, you can see if it makes you more money or not. And then you might be able to backtest it to get a little bit more data. And then you have clear evidence if it works. Same with this trading bias. Fill it in your journal and see if it improves. And maybe it doesn't improve your performance. That can happen. For me, it does. And I know for a lot of professionals, it does. But if it doesn't for you, don't just do it because I say to do it. Just do your own research. Be skeptical about everything you hear and read online. Test things for yourself and keep improving. So that's the video, guys. Hopefully you learned something. If you have questions, comment down below. If you liked it, like the video, subscribe to the channel. And if you are interested in working one-on-one with me, comment down below or book a free Zoom call. The link is in the description. I do only take on a few people per month because I work one-on-one with you. So that's it, guys. Have a great day and I'll see you in the next video.